Good day. My name is Esther Chibesa for Citi, Sub-Saharan Africa Transaction Services, and today we're speaking to Ken Njoroge, Cellulant. Ken, you're very welcome to this discussion. I remember when I first met you about 20 odd years ago, you were a young man in the proverbial jeans and t-shirts and a cap on your head selling ringtones. How have you moved from there to running this phenomenal business that you do today?
That's a good question, and I think it was in Uganda that we met many years ago.
Sure.
Uganda was actually our first market. So, really, I think the founding of the business really came from. You could consider that as founding of its mission, right? We at the beginning set out to build up an African leader in the mobile area. At the time, we weren't quite sure that we were going to be a payments company, but we knew that we were going to be a mobile services company of one kind. It was very early days of mobile. So we had this simple vision, which we sketched out on a serviette around mobile services. And we kind of knew that everything that you saw on the internet at the time would come to mobile in one form or another. And then there would be a need for infrastructure service providers, software service providers, payment service providers, all sorts of people. And then, of course, we had different names. So we set off and we kicked off the business in Uganda and Ghana. At the time, the mobile was basic. So we started with value-added services with a focus on music and ringtones at the time. And believe it or not, we actually built a fairly good and very profitable business over the first 5 years of the journey. So I call that a phase one of our journey, right? And we pioneered a lot of the mobile services in the region with the services in Uganda, Kenya, Ghana, and Nigeria. Those were essentially the sort of core markets. Then, towards 5 years in, we looked at it and we asked ourselves whether doing music and ringtones, we were going to be able to have the kind of impact and the scale of impact across all of Africa that we desired, and whether we could actually build a sustainable and competitive business. So we came to the conclusion that we couldn't. But at that time, the business had grown. We had a very good team, and we started to look at the data of our consumers. So by then, we had about 6 million consumers that had bought music in Kenya and Nigeria. But when we started to look at the data, we realized that there was a problem with billing. So we sold ringtones at $1. And we found that customers had a problem buying ringtones for $1, but there was a lot of demand, right? So when we broke this $1 into 4 small sort of part payments, the business just quadrupled around that time. So we started to think that maybe that we could actually build a more sustainable business by building out the payments infrastructure and allowing other businesses to build on top of it, right? So we thought that by doing that, not only would we build a competitive advantage in our music business, but also that infrastructure would be useful to other people in the ecosystem. And therefore, we moved to stage 2 of our business, where we started to sell this vision to banks. And over the next decade, that's between somewhere 2010 and 2020, we basically took this vision to a large number of the banks on the continent. So today we provide payment platforms for the continent's largest banks and largest multinational banks.
Fantastic. So yours has been a journey of trial and error, introducing new products, pulling back, pivoting. You're now at a time where this crisis obviously has caused you, as well as many other businesses, to think carefully about the future. So firstly, how have you done? How has Cellulant done through this crisis season? What have you learned? And what does it mean for you going forward? How will you build out a more sustainable business case going forward?
Yeah, I think so. I think Cellulant's journey prepared us in a couple of ways. No, so number one, from the very beginning, we were very, very long term in our vision. So we crafted a vision, and we accepted that it was going to take very long. Of course, it took twice as long as we thought it would, but inbuilt in the character of the business was very, very long range planning, long range thinking, and making decisions, always making bets for the long term. So that's number one. Number two, we had a fairly tough 2019 because of the terrorist attack. And this sort of prepared the business to really come together and for the people to come together to really drive around crisis. So the business is really well designed and responds to crisis quite well. So when COVID came, it was quite easy for us to just go back to the team leaders and just say, okay, guys, look, this is what we are seeing. This is what's happening to other companies in the world. What is going to be our response? And we came into the COVID season making very aggressive investments in technology and so on. And so we were essentially burning a lot of cash. The credit situation in the world and the investor sentiments had changed completely because of COVID. So we needed to slow that down. So we did. We did end up, of course, trimming our headcount by about 10% or so. I could say it was COVID accelerated. We needed to do it anyway to tighten the organization of the business for the next phase of growth. So culture-wise, working remote, responding to the crisis, the business did quite well. In terms of impact to the business, we had zero impact from COVID. So we have a diversified set of customers and diversified sectors. So some sectors like airlines, hospitality, retail took a hit. And so we saw those customers basically drop to zero overnight. And then we had also a lot of e-commerce customers and banking customers where the volumes just went up. Of course, we didn't see revenue growth from that because regulators were also quite aggressive in controlling tariffs to try to support digitization. But what we're seeing now after the crisis is that the increased usage continues to grow, and we see a lot of push to digitization. So I would say that the growth trajectory we're seeing from this quarter going forward is slightly above expectations, and most of that pressure is coming then from COVID-related digitization. So we survived the tough period, and then now we are seeing the benefits of a lot of the increased digitization, and then also just a good response to the crisis in the organization.
Fantastic. So, so the race is on. The race, obviously, for digital is on, and everybody wants to make an investment that is meaningful for purposes of transformation. You have an excellent way of thinking about this question of e-commerce. The hard data don't tell us what is the full scale of the opportunity in Sub-Saharan Africa, right? But at the same time, you have an observation about how e-commerce really truly functions in Africa. So could you explain, your viewpoint, your insight of client behavior and what it really is, and how you will turn those insights into, acceleration for your business case?
Yeah, I'm very passionate about the e-commerce subject, and also partly because I feel it's normally very misunderstood in Africa. I think the general paradigm of e-commerce is American European model, where you have a lot of these destination platforms like Amazon.com and so on. And then in Africa, when you think about e-commerce, you think about Jumia's and so on and so forth. And if you talk to most observers on e-commerce, they'll tell you the same problems, that the reason why e-commerce is not exploding in Africa is lack of trust, lack of payment platforms, lack of logistics, lack of just the delivery systems to the home and so on. But I would argue actually that there's a lot of e-commerce already happening. It's just happening in a way and in a method that it's quite subtle, right? So people go onto Instagram, catalogs of handbags, shoes and so on and so forth, so published on Instagram or Facebook. Connections made between friends. Hey, talk to this guy, talk to that lady. She's got great stuff. And then basically, and I see it with my wife. She would go onto Instagram, and my daughters, and they pick some stuff. The conversation moves off onto WhatsApp. They exchange. They do the color matching, and then so a boda guy shows up at my door.
What about
with a size, size set of ranges and so on. Boda Boda is a small motorbike, right? For those not in Africa.
Yes.
And then they try on the shoes, and then whatever they don't like, the motorbike guy just carries back to the company, right? And this is happening for handbags. It's happening for shoes, sports gear, and so on and so forth. Some of these items which are very difficult to find in the local environment.
Yeah.
There's a lot of that happening, and then you pay by M-Pesa or you pay by mobile banking and so on and so forth. And it's happening in Kenya, in Tanzania, in Nigeria. This is the way that is happening. So I would argue actually that that's e-commerce, right? Because the product discovery happened online, the negotiation for the trade happened online, and so on and so forth. So the way we think about it is that the true e-commerce in Africa is answering the question, so how do you build scale into that kind of environment? How do you use technology to stitch those things together, to provide better matching, bring data analysis, machine learning, and so on and so forth to that platform? And we call that social commerce. And it's huge. And during this COVID season, I would think, for instance, the share of e-commerce or the share of that kind of commerce, social commerce, in my households most probably moved from 10% of staff to 60%. Mm-hmm. And this is happening everywhere, right? So e-commerce is actually big. It's not in the form and fashion that people think about it in the traditional sense of destination platforms, destination brands, and so on. And frankly, I don't think that the capital is here yet and will be here yet for a long time to build destination e-commerce. So e-commerce must happen in places where the audience is already are. It'll happen on WhatsApp, it'll happen on Facebook, it'll happen on Instagram. There's hundreds of millions of Africans on those platforms anyway. There's hundreds and millions of merchants and traders on those platforms anyway. Mm-hmm. They just need much more better technology, better seamless payments, seamless connection of the logistics infrastructure, which is already there.
Yeah, and to my mind, those who have an early advantage are in fact the mobile network operators, because they have the payments data, they have the smart data, the data that tells you which websites or which platforms people have been on. I would argue that the potential leaders here could be the MNOs.
Yeah, it's a good argument. I think in terms of, let's say, the people that have the building blocks to actually become great players in this space, you're right, are mobile operators. But will mobile operators generally do it? I don't think so.
Careful what you...
Yeah, it's their DNA, right? I mean, they're wired for very different type of business. I'm sure there's a couple of mobile operators that are going to be able to remodel themselves to really become e-commerce companies. I always joke that if I wasn't doing my current job, the job I'd really love is to run a mobile operator, right? I just change the business model from selling calls to actually building e-commerce and payments infrastructure based on the data and all of the stuff that they have. Frankly speaking, I think the battle for e-commerce is going to be won by companies that come from a software heritage, that have a partnership mindset, so they understand that this is not it's not a technology, it's an ecosystem. So you got to get the software, you got to get the model, you got to get partners who collaborate, and then you got to innovate on services that stitch many things for the consumer together. And so if you ask me what my bet would be on the Cellulants of this world, right?
Uh-huh.
That's what
my bet would be on you.
Of course, right? But that's where I put my money on.
So one of my last question would be, I think you're doing exciting work, really, building interesting ecosystem, right? In previously untenable spaces like agro, for example, out in Nigeria and Uganda. Tell us a little bit about that and how you're making that work and how you will scale.
Yeah, I think. Yeah, thanks for the comments. I think the classic reason why businesses exist is to solve problems, right? And when you're in Africa, we are really at ground zero of many things. Like there are really big problems. Now you talk about agriculture. Let's look at agriculture, right? The continent has 60-70% of the remaining arable land. And yet, despite that, we are spending, roughly about $40-50 billion a year importing food into the continent, and yet the little food that we produce, 30-40% gets lost in the farm, and because the linkages between supply and demand are just not there, poor infrastructure, communication, and so on and so forth. And yet with mobile now, all this has changed, right? So I think the basic model, the basic thinking for us in agriculture, and also just a couple of other value chains, is to basically just sort of build the platforms and evolve the platforms that connect the pieces together, right? And there are farmers that are producing stuff. There are factories that are running on 30-40% production. Just match this supply, take out all of the inefficiency, lower the cost for everybody, provide much better predictability for the transport operators to get better investment and so on and so forth. And to do that using technology, right? It's like the Uber of agriculture, right? And it's in the end, when you see it operating, it's a very simple model, but to a somewhat silly underlying problem, right? Like it's crazy that this has existed for such a long time. Mm-hmm. And how you get scale there is actually to continue to just operationalize a model, because the problem itself is a big problem. So if you solve it, you get scale. And ag in Africa is $300 billion segment. By 2030, I think that'll be about $1 trillion. So it's a large segment. So if you can solve it and find a model that is repeatable across countries, and you certainly will be able to solve a huge problem and build a large business anyway. So yeah, that's our thinking there.
Proudest moment for Cellulant?
Oh, proudest moment for Cellulant. Oh my God. I mean, I am the most difficult guy to answer this question. I'm always looking at the things that we need to do better and so on and so forth. But I think I'm very proud of the way that the business has pulled out of 2019 crisis and 2020 crisis. Uh-huh. These were two crisis years. And the business basically managed to emerge out of the crisis stronger and continues to grow. So that makes me proud. It makes me proud of what we have built. I'm going on leave. No one's going to call me, trust me. So there's a capable team that runs the business. So yeah, that makes me proud. I mean, the institutions come together quite nicely over the years.
It's such a pleasure always to speak to you. I wish you well. Thank you for sparing us the time, and have a great leave.
Thank you, Esther, and great. And let's stay in touch. Thank you.